All right, I posted like 8 videos today, but here's another video. This is going to be a market review going over. I actually took trades. I did a recap on that, but I'm going to touch on them again because I want that video to be separate because that's kind of like my baseline. But yeah, I took a few trades today. I took 3 trades today, and we're gonna go a little bit into those as well, and then also just kind of a daily market review. ICT was not live today, so therefore I'm like, hey, maybe I should kind of test this. They were all in the PM session though. None of them were during the AM session because I kind of just wanted to tape read during the AM session, so I wasn't really wanting to trade during the AM session. Tomorrow I might trade during the AM session, but also I might not want to if ICT actually is live streaming. So, anyways, as we can see on the daily chart, we have now reached into this daily volume imbalance, and that's kind of what we're gravitating with. Notice how we're not really getting much displacement still. We're not really displacing here. So I want this next candle, if we do want to reach this anytime soon, I want to see the next two candles provide that displacement. If not, we might need to retrace into this inefficiency right here. We also have these down close candles right there. So I want to see, like as ICT says, I'm still looking for this, and so is ICT. We're looking for this, but also if we don't get speed here, we are in a kind of consolidation. So therefore, we could have some retracement back down here to then have a possible expansion. And today was a clinic, and I do want to go over pretty much everything. So as you see the hourly chart, there isn't really too much to this hourly chart. If we look at the highs here, we have taken this high, and then we have a big wick here. So I do think that we could have a retracement here, but I want to stay patient. Nothing for certain. If we're just looking at this, I'm just expecting to see new highs, but keeping in mind that we do have sell side liquidity that does rest here at this low. So it's just something to be cautious of, to keep in mind. So let me just throw on these annotations. I do have a lot of annotations, and if we just look at the new day opening gap indicator, which I use Kryptonite, and these are my settings in case if you're curious. But we have a high of the day put at a new day opening gap. That's very nice. High of the day at the very nice at that. And then we put a low of the day after taking sell side liquidity. And if we look at ES, usually most of the time, more often than not, we're putting a higher or low of the day at a new day opening gap or new week opening gap. And this low of the day is at ES's new week opening gap. So that's what we traded into there. And yeah, so that was the high and low of the day. And let's just hop right into it. I do want to go over Asia, London, and New York because I thought like the price action day was just absolutely fantastic, like everything about it. And I have so many annotations. I like never delete my annotations. I don't know why. I just because I just like seeing them though, because like you put in work, you don't want to see them get deleted. So as we see here, this is the current new day opening gap here. I'm just gonna go into replay. Actually, we'll just know that this is the current new day opening gap. I like going into replay because then it pops up as yellow since we started a new day. So this is the current new day opening gap. We have initial buy side and initial sell side. We come down, we reprice to the sell side, then we come back up into this inefficiency right here, and then we kind of consolidating. We now use this new day opening gap as resistance to trade to this lows to then form an SMT. We form SMT after taking relative equal lows. Then we have displacement. We have a fair value gap in, fair value gap out. This is a institutional order flow industrial overlapped with this breaker right there. And we trade up. Oh, and this is very nice. We trade right back down to this volume imbalance right there after taking buy side. So there was nice opportunity. There was nice range during Asia. Although usually Asia isn't too crazy, but this was pretty nice price action here. Then we consolidate, we come back down, volume imbalance. Then we come back down, another volume imbalance. We take this in this high right here. Then where are we dropping down to? Inefficiency right there. Then we have another leg higher, dropping down to where? Inefficiency right there. Order block right here. Then we come up, we take buy side, and then this is now when London starts around here too. And then where are we drawing to? Where are we drawing to? This is beautiful. Like this is beautiful. New day opening gap gets perfectly priced too, and now we put in relative equal highs. This is generated buy side liquidity because this candle's body closes back within that range. Then we see displacement lower. After that, then we see a fair value gap get formed. We don't really have an imbalance there. this SIBI offers resistance, and then that is your silver bullet between the 2 and 3 hour. We have resting liquidity here. We also have this new day opening gap, which is the current new day opening gap. As long as this low, that's the draw on liquidity. We come down, we take that, and we come back up into these inefficiencies right there. Look at volume imbalance right there. Beautiful, beautiful pricing. Look at the constant encroachment of these. Look how well that gets respected. And then boom, we take that, come back to this low right here. And then this is now when we kind of transition. London session closes 6 a.m., 7 a.m., 8 a.m., 9 a.m. At 6 a.m., we had a nice hourly expansion candle here. This is denoting the dealing range low to dealing range high. We have 25% of that acts as support, 50% acts as support. We leave a breakaway gap, which is a measuring gap at 50% of implied dealing range, and we displace higher into buy side. So once buy side is taken, we come back down into this inefficiency right here. We take sell side right there, and now we create a volume imbalance after equal highs within a new day opening gap. It's very nice to see this volume imbalance act as support, and then also this inversion level. If we look at this inversion for value gap, if we look at the bodies, that's very nice to see. We have displacement higher, we have this fair value gap right there, and we come up into take that. So now in this case, like I said earlier, this technically isn't still low resistance liquidity, but we still have relatively equal. We would like to see, like here in this example, we would like to see the body remain into that, or the body rest. We would like to see the body close below that. But this example, the body does rest above that. But remember, as outlined, we still have this remainder of this daily volume imbalance. And if we look out on the new day opening gap indicator, where are the cluster of new day opening gaps? Well, we have like 1, 2, 3, 4. We have like 7 new day opening gaps up here, 8 new week opening gaps, and we have we have like 3 new day opening gaps that exist at sell side. So where are we more likely to draw to? We're more likely to draw to that inefficiency that still has not been delivered to yet, and all those new day opening gaps. So that's exactly where we end up drawing into. And also, where do we take liquidity? We take sell side here and this low, and what do? We form SMT. Where else is this happening? This blue line for me is my true day open, so we're dropping below true day open. Oh, and I forgot to point out that we have a real liquidity void right there that we end up repricing to. And then we use that new day opening gap. Displacement lower. What does price end up doing here? Changing the steady delivery on the 1 minute. This is a lower time frame order block that we'll get into. Lower time frame change of steady delivery right there. And also, us tapping right here is a 5-minute order block. Also is a breaker right there. And then we're also resting within this breaker right here if we use the last 3 up close candles. So we have all this happening around, and then we have this inefficiency that still gets delivered. So we're gonna go into the lower time frames. Don't worry. We have 950 opens up. We trade into an order block. We take sell side liquidity right there, and then we end up displacing higher. Kind of consolidate. We take a high, then we come back down, slam, take this low, come back up, then we come back lower into that breaker, and then we eventually take buy side there. We're not take buy side, but trade right into a new day opening gap. It's very nice to see that high be put in. Like, these are the type of annotations I say it's very pleasing to see the price put in. Like, those are the type of annotations I say in my journal. And then, so we take that, and then we immediately displace all the way back down here. So what is this? We just established a very large dealing range here. Very large. And where do we end up drawing right to? This is equilibrium from this high to this low. So that's where we end up drawing into. And we're kind of just consolidating here. 11:30. Lunch macro opens up here. And then we start. And then we have 11:50 macro that displaces to the sell side. Lunch macro then runs on these stops here. And then this is the PM session. Already kind of went over this. I'm just gonna touch on it briefly, but I already have a video when I traded, and then we also can go over the trades that I took. But I took 3 trades in the PM session. This is just a baseline for me, just to kind of get my understanding and just for me. This is just for me. So this happened on accident. This happened on accident. I immediately stopped. I was just kind of testing to see if the demo account was working. And then I took a long there, and I took a short there, and I added to it there, and then I took it off there, and then I took a long here. This isn't too deep of a premium, and then I took it off at around break even right there. A little bit above that, we end up repricing here. I was looking for all the way up here, which it doesn't make sense for us to even deliver to that. We're in a deep premium and of this PM session. But as we can see, we have FOMC meetings. We create a dealing range here. We can also look into that. We create a dealing range. We have a wick. Constant encroachment's getting respected. So we then have a lower time frame inefficiency that gets inversed. And then we seek buy side right there. We then reprice to where this inefficiency right there. Also into this imbalance right there. And we end up displacing lower time frame inefficiency. Then we come back up into this sell side imbalance right there. Like, since I've used the 15-second to 5-second, there's just so many elements that you just don't really get to see on the 1 minute, like even just the 1 minute. And that's why I like using those lower time frames, because you really get a deep understanding on what price is doing, what's more likely to do. And if you have that advantage, like that's a big advantage. But it can lead to doing too much, but I don't think it's really doing too much because it's showing you the real reference points. But then we have a 250 macro right here. End up having a reversal during that. We then end up pricing right to a, like I discussed, a new day opening gap on ES at that point. And then we come up, and now we respect the current new day opening gap right there and this buy side imbalance right there. And then displacing up and taking buy side during that 345 market on closed macro. That's the SMT that forms. Usually, I've been backtesting this, and I still want to continue to backtest this, but pretty much most of the days, if not all the days that I've kind of backtested, there's going to be an SMT that forms within this last 15-minute macro, and then that will give you insight on where we're likely to price to. But we end up having a nice market maker buy model here. We're going lower, we're trading lower to then trade higher. I was actually looking for this imbalance to get traded to. It never gets traded to. I didn't really look at why this low gets put in here, but let's look at it right now. I honestly don't know why. Is that a 15-minute imbalance? Yeah, okay, it is a 15. Is it constant approach for that? Oh, wait, is this no, there's no wick on that. Is this CE of this? No, we don't even trade a CE. Okay, but that's a 15-minute imbalance. I was admittedly trying to look for this. So that's why I kind of got caught up. I still want to see prices draw lower into that. But had I paid more attention to ES was trading into a new day opening gap, so it wouldn't really make sense. I mean, I guess ES could deliver to this imbalance right here, but that new day opening gap is going to be of more significance as we see there. Like, look at constant encroachment. It's getting perfectly respected here. Then we have displacement. So what do we have here? Balanced price range. What is more likely to happen? We have a balanced price range after respecting a new day opening gap. That's the signature that we're in a buy program. And what else do we have here? What do we have here? Stop hunt. Stop hunt happens, buy program activated, and then we end up trading up into these highs right here. Beautiful. Beautiful, beautiful, beautiful. Everything today was beautiful in my opinion. Okay, now let's get into the nuts and bolts. We're going to hop onto a 15-second chart, and then I think I might hop onto a 5-second chart to kind of see these details of these algorithmic signatures. We're going to look at this real quick, but I'm not going to really pay too much attention because there's not enough trading volume to really use the lower time frame charts. There's that real liquidity void. There's that buy side imbalance. Not really too significant here, but here we have market opens right here. What do we have here? Power 3. We're going lower to then go higher. We then have open, low, high, close right there. And then as well as the opening range gap, we then trade below it to take sell stops to then form an SMT. Smart money is accumulating there. And then what do we have here? We have displacement above, opening range gap. Simple. Like that's really it. We're trading above the new day opening range gap, using constant approach with that as support. We also have this lower time frame order block, this 15-second order block, the last two down close candles. What is this? Change of state delivery. Come back down into that, using that as support. Then we're trading into this. That's a 5-second inefficiency that we'll look at. And we come up in the breaker, we take stops, then we leave a breakaway gap. Now we're trading. Now we're consolidating here. We're failing to this kind of exhaustion, will you say? We're failing to make new fair value gaps higher. We then have a stop hunt, another stop hunt. Was this a 1, 2, 3 drive right here, and we end up breaking down all the way down here. I personally don't know if this isn't really a model for me. So there's probably a 5-second 2022 model there, and then we come all the way back up into this inversion level right there. What was taught? What was taught? The inversion level was the one that's gonna be where ICT looks for. Then we have that right there. Boom. We don't actually take sell side, which I kind of wish we did. I didn't really see what ES did, nor did I really care too much to really see where ES did. But we do have another SMT, so like this is just cracking correlation. ICT took a trade here. I think it like he's not gonna go live and then he takes a trade. He's not gonna go live for a day and then he takes a trade. I mean, I guess it's cool. He's gonna start trading live, but I don't know if that's really like. I guess we'll see when the time comes. Then we have this 15-second inefficiency. Boom, institutional order for entry drill. We trade into that volume, or this got messed up. We trade into that volume balance. We trade into the high end of that. Where can we go past that? New day opening gap. We then break down. We then leave a volume imbalance that gets referred to in the PM session. Institutional order for entry drill. This is probably an immediate rebalance on the 30-second chart. Then we come back down into what? New day opening gap. Beautiful delivery right here. We take sell side. What have we now formed? We've now formed a breaker. We then have an inversion level that gets respected. Notice how this leg right here, we've just had a big retracement leg lower. We just had a big drop lower. So this leg here is not the actual move. It's a move to prime and to generate to then come back lower to then slingshot, because now we have momentum here to then trade to buy side. Notice where this is happening as well. The 1050 macro, and look at what we have here. We have inversion level. It's pleasing. It's very nice to see the inversion model play out. What else is this? Sell side taken. We don't really have a shift in market structure. I'm not going to count that. I would like to see above this side. But we have the inversion model play out here. Beautiful to trade to where? Equilibrium of the parent dealer range. Breaker access support with an order block. Boom. Up there. And now what do? We trade into equilibrium. We now take buy side. We've now repriced in this inefficiency. All this is balanced. We have buy side delivery here and we have sell side delivery right there as well. So now we trade into that. And now I don't really think there's anything crazy here. Lunch macro starts here at 11:30. We then see a 2022 model right there. Although that's kind of hindsight. Now what are we doing? We're respecting up close candles. Sell side imbalance gets respected. Sell side imbalance right here. Look at this volume imbalance right there. Beautiful. Look at the body stopping at constant encroachment. So what is this now? This is now an order block right here. Well, what was taught? If we have a up close candle, when we're bearish, that doesn't trade into constant encroachment of a SIBI, or I think this is a 1 minute SIBI. You might have to look back. I'm not gonna go to the 1 minute chart, but I think this is a 1 minute. It would make sense. Yeah. But anyways, we have an order block right there. This is an opening range gap right there. Just look at the reactivity right there. And then we trade up. Institutional order for entry drill. We trade lower. Look at that, 50% of that. Sell side imbalance right there. Boom, after taking buy side. And then we have taken these lows. So if we look at these lows, these are London lows. And notice how they were left. I didn't touch on that, but these are intentionally left. Then we trade into that. And then we see displacement. I don't think there's really anything here, so I don't really want to go over this too much. We're just waiting. We have FOMC mini minutes, so I don't think it's like if we just look at this, I'm not gonna try to be engaged in trades like this. So I think this is just there's nothing to go over here. Like, look at price action, very lethargic. I don't want to be in that. I don't, and especially ahead of FOMC median minutes. Like I know it's not the actual FOMC, but it's median minutes. Volatility is injected here. What do? What is this? We create a dealing range here. Dealing range right there. We then trade back down into this volume imbalance right there. Look at that. Volume imbalance gets repriced too perfectly. And then we have this right here. What is this? Inversion gets traded over. Okay, once you trade over that inversion, that's kind of okay. We're maybe not in a sell model here. If we were in a sell program, this would probably get respected. We just had this big dealing range that was established here, and people just saw that we traded up here, and then we might want to be going lower. But we're still in a buy program here because we're disrespecting this. We're trading above this, and then now what do we have here? We have a volume imbalance. That's the glitch in the matrix right there. Boom. I can trust to be a buyer here. Right there, that volume balance. Notice how this volume balance gets disrespected as well. We're in a buy program. It's clear. It's clear. We're in a buy program. After taking sell side, then what do? We displace up to where that volume balance right there. After taking this high, there's that daily volume imbalance right there. And then here's where I was actually looking to take a short after we have had fair value gap in, fair value gap out. What is this balance price range? So we don't really need to trade up into here. And I was this is good though. This is good. I was trying to see if we could maybe trade up a little bit higher, and I was actually kind of looking for this, but we don't need to trade in there, and that's actually nice. That's what we want to see. We don't want to see us trade up into that balance price range, and we don't. So what do? We trade into this. Boom. Big displacement. Okay. Well, we might actually be in a sell model here. We have a balanced price range. We're now respecting this, and now we're having big displacement. Okay, that doesn't mean the move is over. That just means that we're within a sell model. What do we have? We have equal lows here. And what else do we have? New day opening gap. So if we're in a sell model, what am I looking for? New day opening gap, new week opening gap. And boom. Exactly where we price to. Okay, it's not the exact low of this, but it doesn't have to be. All you need is that. All you need is that. And then this is when I would recommend watching my other video, but I end up taking a buy here. Trading to this volume imbalance. Well, actually was a 5-second liquidity void that I traded to. I actually entered here, exited here, but we trade right into that beautifully. Then what do we have here? Displacement leg. Boom. We trade all the way back up here. Then we have more displacement here. Boom. Entry. Entry. Displacement. Volume imbalance. Up close candle. Look at this. Immediate rebalance right there. There's a small inefficiency there. What do we have here? Left side of the curve. We recapitalize at those areas. And then we, look at this. We put a low right above that. So then what are we probably going to do? Turtle soup right there. Stop hunt. Stop hunt occurs right there. Then what do we have here? Balanced price range. Inversion. Fair value gap in, fair value gap out. Boom. Entry right there. Another entry adding. Boom. Right there. Beautiful. And now, this is kind of when I got tripped up because I wanted to see us trade into that 1 minute imbalance. ES puts in a low at the new day opening gap. Then what do we have here? We have displacement. We have consolidation here. We have accumulation here. I think I was kind of over analyzing. I was kind of looking for an SMT more than looking for price, and I think that's what tripped me up. I was hunting an SMT. That is what messed me up. I was hunting for an SMT. I kind of wanted to trade another. I kind of wanted to have another trade here just to kind of have a baseline because that's what I was trying to do, and that's why I kind of forced this in a deep premium. Which, although we were still within a buy model, it was the right idea. I just think it was unnecessary. Accumulation, manipulation occurs. Order block gets respected, and this is crucial. So now we have displacement. We have an imbalance here on the 1 minute, as discussed. Then we're trading back down into this new day opening gap. So since we have traded into the new day opening gap and we respect that, that's telling. That means that we're probably in a buy or sell program. So the fact that we have displacement higher, we have accumulation, and now we have manipulation. We're respecting the new day opening gap. Whoa. We're likely in a buy program. So we have order block that gets respected there. The last on-close candle, boom. This isn't like the prettiest. I'm not gonna lie. It's kind of just a straight up move. Which whenever I look at a macro, I kind of want to see the AMD kind of form within a macro. Like during this macro time, I want to see a little bit of accumulation, like some power 3 within that. But here we have accumulation manipulation before the macro. Then right when the macro opens up, we kind of do trade lower, and then we just end up expanding higher. We form that SMT there. That's where that SMT is at 350. Look, 350. What do we have? We have a like that. I'll continue to show this. 350. We put in a larger candle than all the other candles. So we have that like liquidity injection at 350. We have a lower. Excuse me. Sorry. We have a lower time order block, and then we'll look at that in the 5-second chart. And then we trade back lower. We have a stop hunt there. What do we have here? Balanced price range. What is more likely to happen after we form a balanced price range? We're likely to respect that. And then that's what we're trading at now. And yeah, now we're trading up into that opening range cap. I think we're likely we could take this high, but wow, that was a lot. I think I kind of want to go in the 5-second chart, at least just for here. At least just for here. Screw it. Let's go in the 5-second chart for everything. So we have accumulation, manipulation. There's that order block there. There's not really much here. We have a volume balance right there. There really isn't a whole lot here extra on the. Where's this order block? I don't know where I got the order block from. Okay, but here's this inversion level. Dealing range gets established at 350. We have a small dealing range. It's small, but it's fractal. It's fractal, and this is what I love. Like just going into going in these lower. Look at that respect right there. I mean, maybe it's just a little bit cherry picked, but I don't know. Going in these lower time frames and being able to see these things in the lower time frames, like I don't know, like that's just enough evidence. Like it's just beautiful to see it in lower time frames. It's just absolutely wonderful. So here we have a dealing range established. We take buy side, then we take sell side. Then we have this gap right here. What is this? The balanced price range. We disrespect that. We reclaim it. We reclaim it. Then we come back up. Then we come back down. And then we form SMT. We form SMT. This right here is likely to get inversed, and that's what we end up seeing. We end up seeing a trade to buy side there. That was very nice. Here's that inversion level on the 5-second. That's what I was looking at right there. And we have a new day opening gap that we discussed right there. Here we have a 5-second volume imbalance that I discussed this already in the previous video. Volume imbalance right there, and that's where we can trade up into, and that's what we end up trading into. And here we have a 5-second. Look at this fair value gap. I saw that, and I saw this volume imbalance, so I kind of I had a market order that got filled. I was looking for that volume imbalance. Then once I got respected, I was like, okay, I'm gonna enter that. Trust my stop here. Take some heat on the trade, but where do we get made jagged, and where can I trade aligned with that order flow right there? Boom. Here's the details on this. I'm not really gonna go in depth into that. And then here's that inversion level, volume balance right there, disrespected. That 15-second volume balance. We don't trade into this volume balance. We leave it as a breakaway volume imbalance. And is there anything else? I think honestly that's good volume balance right there. I mean, the volume imbalances on the 5-second, 15-second. That's where the algorithm wants to reprice to. It wants to make those efficient. Like it's like why would there not be an algorithm that wants to make the market efficient? They're not gonna stop making an efficient market. You think they're just gonna leave volume imbalances? I don't think so. So therefore, I'm not worried. I used to be worried about maybe they'll change things. I highly doubt it. If anything, they're gonna make trading like illegal or something, or probably put some BS. I don't know. It's like the new age, bro. Anyways, that's all I really got. Kind of a longer review, more in depth. That's that 5-second balance. Man, I feel like I've been talking for an hour. Then we see that low get taken. Yeah, and I do want to go over here. We have that 2022 model. And we don't trade into premium. Actually, let's see. We definitely do. We trade in premium of this dealing range. Yeah, we trade into premium of that 2022 model. Yeah, that's all I got. Hopefully y'all have a good rest of your day. Hopefully y'all are blessed, and hopefully y'all have a good rest of your day. And that's all I really got for you. Stay well. Stay well. That's all I gotta say. Man, my exes cannot get any worse. It's just like I'm a robot. I'm an NPC. I forget how to talk. I don't know, man. Anyways, Have a good one, and see you on the next one.